When it comes to investing, day trading, swing trading, the main thing you really want to focus on is mass psychology. What are the crowds of people doing? And you guys have heard me refer to volume and groups of people as seagulls. If you haven't seen in the Discord, I'm always sharing a seagulls gif all the time with you guys, where it's a bunch of seagulls on the beach and they're screaming mine, 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 mine. Well, look at it in a way. Volume are seagulls. They're screaming mine, 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 mine. And the way that everybody is taught, stock scanners, stock screeners, everybody is taught to program these scanners and screeners to pick up stocks that are hitting new highs. It doesn't matter if it's new daily highs, weekly highs, monthly highs, yearly highs, multi-year highs. Everybody has criteria to look out for stocks that are hitting new highs. And this is a perfect example on a stock like VAXX. You can clearly scroll out on this chart, and what we're looking at is a 1 minute chart. Every one candle you see on this chart is 1 minute of trading in the stock market. Down here at the bottom, you see all that volume right here spiking up. Clearly, when you scroll out and look left, there's no volume at all interested in this stock. I think it's safe to say, right? Even looking at the price action and how spotty price action is, there's no demand for this stock. Nobody cares about this stock. Well, going into this trading day, and let's zoom in on this day, you see things start off normal. There's no volume at all interested in this stock. For the first 2 hours, this market is open from 9:30 all the way up until 11:30 right here. That's when volume starts to come in. So as the day progresses, markets have been open for 2 hours. VAXX, people start to take note. It's going off on their stock scanner and screener every single time this hits a new high. So gradually throughout the day, people start to take note. VAXX hits up on their high of day scanner. VAXX hits their high of day scanner. Then they click on it, and more people start to click on that. And that's how this happens. What unfolds afterwards. People like stocks that continue to rip up. So everybody jumps on board, and they wait for setups and take advantage of these opportunities. With this run up here from $4.50, we run up to a high of almost $7. That's a $2.50 run to the upside in a small cap stock like this. There's a few ways you can look at this. I tell you guys all the time, the way I look at stock charts, and all of you guys, we all have different sets of eyes. So we're all gonna pick up on patterns and recognize patterns differently. We're all different. We're all gonna naturally see things that ourselves are gonna naturally pick up on. So when you look at these stock charts, you want to look at it in a way, it's art. It's all in the way you look at the charts. You're all going to look at it differently. You're all going to pick up on different patterns. So the way I look at this and the way I'm breaking it down, we got a good run up here from $4.50. This stock ran all the way up to a high here, just under $7. And I tell you guys all the time that you want to be looking at these psychological price levels, every $1 whole dollar levels. People are buying and selling at these whole dollar and half dollar levels. So a $2.50 run up here, stock pulls back, runs back up and tests its high right here. You see volume came in and tried to rip it up higher. But overall though, the volume wasn't as much versus all this volume here. So it stalls and breaks out. It breaks down there. That's what I'm trying to say. This is where you can come up with a Fibonacci retracement and measure the move from that $4.50 to where it started to run from all the way up to the high And typically what you're going to want to see anytime you measure a move, you're going to want to see a stock pull back and hold at least 50% of its gains from a measured move. You guys understand what I'm saying and talking about here? This is when people get into the Fibonacci ratio and the golden ratio, 61.8. You can use both if you want. You could see the stock clear as day bottomed multiple times at that 50% retracement, and it cracked down to your next level, that golden ratio, 61.8 right there. And from that, stock runs all the way back up to new highs up there at just under $8. It topped out at $7.90. So from $5.50, we run up another $2.50. And also keep in mind, this is why I measure moves like this, and I take note that it ran up $2.50. That was its average true range. Just so happens this run up here is $2.50 to the upside. So it's all in the way you look at the charts, and you can measure from that low here all the way up to this high, and then you'd be looking for the stock to pull back and then hold its gains, and you repeat the process over and over and over. It's all about your approach and your technique when it comes to this, you guys. That's why I say when you show up every day, you're learning. You're learning about your characteristics, what you see, and then that is when you need to start revolving strategies around what you are physically seeing and putting together every day. And I may have made this seem easy, putting this all together, and it makes sense, but it's just from practice and practice, and I'm not using all of these different indicators to tell the story. That's all I'm really trying to do here, bottom line. When you look at it, it's a fight between the bulls and the bears, and with the chart, it's going to tell me over time how that battle is playing out with the bears and the bulls. And with every candle in every different time frame that you have, you're going off of human nature, volume. You've heard people say human nature never changes. These patterns happen over and over and over again, right? So now if you can start training yourself to be that 10% that thinks differently than the crowd, the seagulls, that's where you're going to start making your money, you guys. Some of you may get it, what I just understand, and you're going to have a bunch of light bulbs going off in your head. Some of you people may be scratching your head like, what? Everything you just said, it was just all thrown at me and overwhelming. Well, if this is overwhelming you and you don't understand what I'm talking about, you got a lot of studying and educating to do for yourself, because this is what you're going up against in the stock market when it comes to day trading, swing trading, investing, mass psychology. You want to be thinking about what the mass crowd is doing and thinking outside of the box and being different than everybody else. The statistics have said 90% or more of people lose money consistently doing this. So you don't want to be doing what everybody else is doing. This is a quick little lesson breakdown for mass psychology, volume, and putting together strategies and looking at the charts as if it's art to put together a trading plan and what's unfolding between the bears and the bulls.